Welcome to our Forex and CFD Market Focus Report for Monday, September 23, 2013. Let's go ahead and take a look at our calendar for today. We saw a nice, surprising move upward in Chinese manufacturing PMI data. It came in stronger than expected, and it had a positive impact on the Australian dollar when it was released. We saw some mixed PMI data out of Europe today. We saw French manufacturing PMI came in weaker than expected earlier, while the services index came in at 50.7, stronger than expected. We saw a deceleration in year-over-year Swiss M3 money supply growth, and the KOF leading economic institute in Switzerland upped its projections for Swiss GDP and economic growth for 2013 and 2014. Nonetheless, the Swiss franc was the weakest currency today. We'll take a look at that in a minute. In Germany, we saw the manufacturing PMI come in above the boomer-bust 50 level, but it was lower than the previous print of 51.8. It was a different story, however, with the services PMI. That came in at 54.4, drastic improvement over the last expansion number. The composite PMI data, of course, in Europe were mixed. We saw manufacturing backtrack down to 51.1, whereas services improved to 52.1. Later in the North American session, we're going to have the Chicago Fed's National Activity Index. We're also going to get some preliminary PMI numbers out in the U.S. And then today we start a round of Fedspeak. We have Lockhart on the tape. We have New York Fed's Dudley on the tape. We have Dallas Fed's Fisher on the tape as well. On Friday, we had some comments from St. Louis Fed's Bullard. Bullard indicated that the decision to not taper last week by the FOMC was a borderline decision, suggesting the Fed may perhaps be gearing up to increase the size of the taper when it decides to taper, possibly as early as next month. Let's go ahead and look at some asset classes here today. We saw some continued selling pressure in gold against the U.S. dollar, currently trading around 13.21. Last week, after the FOMC decision to keep policy unchanged, we saw gold moved higher back to the above the 1370 area, but on Friday and today it is weaker. We saw a decrease in the number of long speculative positions in gold as released by weekly CFTC data that came out on Friday and over the weekend. Much the same story of silver against the US dollar. Here we see silver trading around 21.675. That is the second consecutive day of selling pressure, and we see it is nearing multi-week low here against the US dollar. Moving on to the energy complex, we see Brent crude futures are trying to move higher, currently trading just above the 109 figure. We will see if oil can continue to rally here as it did on Friday. We're paying attention to that Chinese PMI data. Keep in mind that the manufacturing PMI print in China was a 6-month high. That suggests that industrial activity may be improving in China, which could lead to more demand for oil. Of course, one factor keeping oil prices tempered, perhaps, is the recent decision by Libya to increase production in some capacity centers that have been diminished in recent weeks due to strikes and labor unrest. Let's go ahead and take a look at West Texas Intermediate futures. We can see that they are off daily lows. They traded as low as 103.94 today and are trading here during the European session at 104.74. So trying to move to intraday highs in West Texas Intermediate. Let's go ahead and take a look at some FX activity. Here we can see the yen is the strongest currency across the board today. And over here, as we said earlier, we can see the Swiss franc is considerably lower today, and in fact is the weakest major currency today. Let's go ahead and take a look at our individual pairs. This is the US dollar daily activity index. It is below water, so there's a little bit of an intraday trend here downward for the US dollar. As we mentioned, we're going to have some Fed speakers on the docket today, along with some PMI data and Chicago Fed data. Here in the euro, of course, the big news overnight was Chancellor Merkel's re-election victory, although she fell short of an absolute majority. So the premise is that Merkel will need to do some horse trading with regard to some coalition partners. Perhaps German-led austerity measures across the Eurozone will be watered down by the lack of a complete sweep by Merkel and her party in Parliament. So we'll keep an eye on that. We saw the euro gap higher about 20 to 25 pips during the open in the Australian and Asian sessions. However, it has since moved lower, and we can see a nice downward intraday trend here in the euro. Japanese financial markets were closed overnight. It was a normal holiday, and of course liquidity was also reduced in some Asian trading on account of the typhoon activity in Hong Kong. Nonetheless, we see a nice intraday upward trend in the Japanese yen. There will not be too many Japanese economic data released today, so the yen may take its cues from other factors. The British pound here is on the positive side today on daily activity index. We can see the pound has an upward trend. The market this week will be paying attention to any additional clues that the Bank of England may be conceding that inflation may be stronger than they would like, and therefore perhaps the Bank of England may water down its forward guidance, or in some point in time actually be forced to raise interest rates before unemployment reaches 7.0%. We noted earlier that the Swiss franc is the weakest currency, major currency across the board. Here's its daily activity index, far below the horizontal blue line here, which is the zero line. So a nice downward activity today in the Swiss franc. In Australia, we see a little bit of an upward move, a little bit of some trajectory higher for the Aussie, although nothing significant at this point in time. Perhaps this little pop was attributable to the improvement in Chinese manufacturing PMI data to a 6-month high. Canadian dollar here, unfortunately, for the second half of September, generally has not been able to garner much intraday strength. It's a little bit underwater here today on the daily activity index. We'll see if the Canadian dollar can recover this week from recent weakness. And of course, the New Zealand dollar is on the positive side, which has been the dominant theme here, as we can see for much of the month of September. Kiwi is the primary outperformer against other currencies here in the month of September. Let's go ahead and take a look finally at some pairs and some cross rates we're taking a look at. This is a daily chart of the euro against the Japanese yen. We can see here with this blue up arrow that the cross rate tested a major support area today, coming in at 133.59. That coincides with the horizontal support line here. Moving lower, as it has been for the couple past daily trading sessions, we're going to see if euro-yen can reach 132.76. We also have this moving average coming in over here, perhaps lending some support. And then as we can see, this other moving average over here on this daily chart coincides with this red horizontal 50% support line. That's a retracement area. We'll see if 132.09 is supportive for the cross when it gets down there. Let's go ahead and take a look at Kiwi. This is New Zealand dollar against the US dollar. This is our daily chart. We drew some Fibonacci retracement lines from the Thursday high down to today's low, the Monday low. We can see correspondingly that today's intraday high came in right around the 50% retracement area of that range. Let's call that perhaps 83.88 as indicated by the blue down arrow here. Any additional strength, we're going to possibly see a test of the 83.99 area, that's this red resistance line here, followed by perhaps a move to the 84.12 area up here. Let's go ahead and take a look at another cross rate. Here we have the British pound against the Australian dollar. We can see that there was a nice gap higher on this daily chart today, although the pound was unable to get to this 171.05 area here. That is some Fibonacci retracement resistance. Let's go ahead and take a look here. On Thursday, we saw a relative intraday low. We drew some Fibonacci retracement areas from the Thursday low up to the high today, and we can see here on this cross rate that the sterling's low was right around this 169.78 area today. That is a 50% retracement of the aforementioned range. We have a blue arrow there indicating this nice technical move. Any additional weakness on this cross rate, we're going to possibly see a test of this 169.53 support area, followed by 169.22 support down here, based on that recent Fibonacci range. The final cross rate that we want to take a look at today is the Canadian dollar against the Swiss franc. We can see that the Canadian dollar moved above this resistance area here after the open. So what we saw was a nice gap lower in the daily chart here of C dollar against the Swiss franc. Intraday support came in right around 88 figure here, as indicated by this blue up arrow. It then took out this 88.51 technical resistance area here on the move higher. We then drew some Fibonacci retracement lines from a recent high of 90.66 down to today's intraday low, and we can see that today's intraday high corresponds exactly with the 88.66 area. That is a 23.6 retracement area of this range down here. Any additional strength by the Canadian dollar against the Swiss franc, we are going to see if it can test the 88.92 area up here, followed by the 8904 light blue retracement resistance area here, and then finally we're going to look for a break of the 89.33 area here as an indication that this cross may have some strength. Thank you for watching our Forex and CFD market focus report for today.